Hi everyone, my name is Piterpakulski. Today we'll continue building financial model of an auto repair business idea project, and today we will be building the cash flow statement. So this is one of the most important statements where you will be able to see the real structure of revenues, expenses, how much financing you will need to start this business idea, when you will need this financing. You can play with the structure of financing. You will be able to see later what will be the payback period, the simple discount using this statement. So this is a very valuable table. I'll be building it today for you. If you find this video valuable, you may give us a like, subscribe, share this video with your friends. Also, you can order a financial model from scratch for your unique business idea. We can help you with that. So let's start building the cash flow statement. First of all, we have to create a timeline for this statement. So this is the beginning. So first of all, we start with revenues. We are consolidating revenues. We are taking revenues from here. So we are taking green lines for revenues and red lines for expenses. So we don't put any manual numbers, figures in statement because if you put some numbers manually, you will forget about them when you will be building different scenarios, and you will make mistakes. We want this story just make this statement as optimized as possible. So then we are moving to direct expenses. Direct expenses, we are taking direct expenses from here. Here we're creating totals for direct expenses. So now we are moving to fixed expenses. Here we have fixed expenses consolidated from all these 4 tabs. So we are taking totals, extrapolate this to the right. Then we are taking payroll, We will also extrapolate this formula to the right. Then we will take taxes. We will create a small table of inputs for taxes. Here will be the tax. Here will be rate. This will be the table of inputs. So this will be, for example, revenue tax, profit tax, payroll tax, here will be the inputs. Here we will place the rates, so I will mark them with blue because blue is the unique color for all our inputs through the whole model. So for example, revenue tax will be 6%, profit tax will be 9%, for example, percent, payroll, for example, will be 7% rate from the base salary. So we are moving to taxes, adding these taxes plus asset tax, so asset tax will be the total from this, then revenue tax, we will take revenues and multiply it on the tax rate. We will freeze this cell. Then profit tax will be doing a little bit later because we need more components for that. Payroll tax, we're taking payroll, multiply the tax rate, freezing this cell. Now we are extrapolating this formula to the right. And then we will be building the first important line is result from operating activity. The result from operating activity will show us how the business operates itself without loans, investments, and so on. So we're just taking revenues minus direct expenses minus fixed expenses minus payroll minus taxes. So then we are moving to investment stage. We are moving to investment. So for example investment, now we will take the data from here. Then I will have the second important line is which is result from investment activity. I will take this value with minus sign because it is an outflow. Now let's move to financing activities. So this will be the equity. Maybe this will be the only manual number that will fill in the model, inside the cash flow statement. Then we will add a loan, the inflow of loan, and we will add payments for principal and payments for interest. Then I will build the line for result from financing activity. Result from financing activity. This will be this plus this minus this minus this. Then we're going to extrapolate this story. Then I'm creating the line for cash balance at the beginning of the period. Cash balance at the beginning of the period. And the last line of cash flow statement is cash balance at the end. At the end of the period. So this is the end of cash flow statement. So here in the first month we will have 0. Then what we are doing, we are taking the result from operating activity plus the result from investment activity plus the result from financing activity plus cash balance at the beginning of the period. Then we go here, put here equals, take this value, this becomes the cash balance at the beginning of the period. Then we are extrapolating this formula to the right. Here you can see what we have. So this value comes from here, and then I will extrapolate both these cells to the right to create a cumulative cash balance at the end of the period. So now we are done with cash flow statement. As you can see, it consists of 3 blocks. The first block is operating activity. The second block is investment activity. The third block is financing activity. And here we have the cash balance at the end of the period. So next video will be devoted to calculating the amount of financing which we need to start the business. Then we will work with simple payback period diagram. So if you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next videos. Thank you and bye.